All right, all right, all right, all right. How's everybody doing this morning? I want to talk to you today about something that everybody's getting nervous and worried about. We need to calm down, hold our horses a little bit. All right, and what is that? Don't buy too soon. Don't try to catch a falling knife. So that's the name of the game today. We're going to go look at the markets, and of course, they're going crazy, doing exactly what we expected them to do. Now they're doing a little bit faster than I expected them to do. Of course, they rose a little bit faster than we expect them to do, didn't they? So we're in kind of crazy times right now, but nothing is really out of the ordinary. All right. Other than the fact this thing took off and went to the moon, right? But if we want to come in here and we want to take just a nice little line across the top of the high of this bar, if you notice, the market really didn't. Everybody's, including me, was like, "This is the most amazing run in world history, and never seen anything like it. It just keeps going and going like the Energizer Bunny." But the reality of it is, it just really kind of went right up here. It's above the previous high. It's been this high before, and then it went that much higher. So it made what is actually what we've been measuring, a classic Fibonacci bow tie. It is right out of the book. It's a little more perfect than they usually are, but hey, we like perfect, don't we? But look at this little bow tie. Now, the bow tie I would draw would actually be down here. I would go off of this peak here. Of course, there's this little peak here too. But this is a region that I'd be more interested in seeing this market come back to get the full bow tie. But we've got a bow tie right here. Look, it's hitting it right there off of this multi-level high. So if we go clear back here, though, the problem with that is you come down here and then up here, and it kind of says, well, it's going to be delayed. It's going to go not clear out in here. It's come down a lot slower. But this market's coming down. It's hitting that Fibonacci bow tie just like a train on rails. But I think the little closer one in here is a little bit more accurate, or even here. See that? Brings it down a little bit faster, up and then down at a closer clip. But that's 90% right there. 100% is here. 130.9 is right down here at the peak. So it'd be a 130.9 to get it back down to this level of the fall. So it was about 30% bigger run than we really anticipated. 100% would be right in here. But to get it back to the bow tie, which is this lower one right here, this off this little ABC top formation. See, that created a beautiful little ABC top in here too, just like that. And then it dropped right down to 130.9, just like a train on rails, man. This market is very much moving right within our probability tables. So it's pretty amazing. Now, the thing everybody wants to do is they want to start buying right now. And that's that's why I brought up this title, Don't Catch a Falling Knife. So the market is a falling knife right now. Don't buy too soon. Now, it doesn't mean you can't start putting a few shares on if you want to, because markets have a tendency to bounce off of these Fibonacci levels. So as they come down, you have the chance that this market could come down, touch these Fibonacci levels, and make some bounces. Now, could we get a V recovery and the market just come down, and this would be the first A drive, and then this comes down, and then we go up and we just go right into another B drive? Possible. But usually what we see is the market coming down in here after this type of a drive, and then come down one more time. So we get a little ABC top formation, right? So ABC, and then we start labeling these things coming down the other side. When that's the case, let's get rid of all the, I don't want to get rid of all the drawings, just some of them. Delete arrows. Delete Fibonacci projections. Okay, so this is where we start labeling coming down the other side. Now, if this is a full run and not just an A drive, and it's a full 3-drive pattern, it comes back down into more realistic expectations, which nobody knows. We don't know how excited this market is. It's pretty damn excited. So it could just come down here and turn around and go to the moon. I'm more likely to believe it'll do a little bit more of a ABC pattern, and that would give us, on the way down, that would give us an X2S, right? X2. Would that be an X2? No, this would be an X1. This would be an X1S A1, right? And if it's an X1S A1, those probabilities of turning into a rally are really low. It's like in the low to mid 20s, 20% chance that that's going to be another higher high. Usually what we do is we get that little ABC pattern coming down, and then that's when we come in here and we get the X2S A1. And that's where we start looking like, okay, now that's the possibility. This market's come all the way down into the 5061.8, but it's given us a little ABC pattern in there first. The thing is, everybody's going to want to jump onto the X1S A1 because they're going to think this thing's going to turn around and go to the moon and give us just an A, B, C like that. And it might very well do that. I mean, breaking at an X1S A1, it happens. Just the probabilities of it happening are pretty low. So we want to be careful here and not start backing up the truck yet. We're excited. We want to get into this market. We've been saying, I want to get into this market, land. I want to get into this market. And so as it comes down, we have a tendency to want to buy at these levels. All I'm saying is be careful. Be careful. And let's go in here and count our chickens first, all right, before we go and start sending them off to the slaughterhouse. Not somewhere we want to go. It's the slaughterhouse. All right. So that's Apple, and that's kind of how I think that the rest of these markets are going to go. But it's coming back down into a nice little Fibonacci bow tie right now. I think the further bow tie down is one I'm really more interested in seeing it come down to. And some of the other markets that we're about to look at have already done that. They've come down here a little bit farther. These, let's go to look at Amazon. This is one that's already come down a little bit farther. See that? Now in here, I think we were playing with this one a little bit. And our Amazon put option that we put in here, see, we sold a put option right here at the 50% level. It's underwater, 874 right now, but we've got 36 days for it to bounce. So if this thing bounces off of this 61.8 or 50% level, because it's right now, it's dead center of the Fibonacci 1 standard deviation. You guys didn't ever think it was going to come back down there, did you? I know you didn't think so. You thought Land Turner was full of cow poop, right? You thought I was full of cow poop, and I kept telling you these things come back down to the 1 standard deviation. So be careful, be mindful. And look, we got that perfect little, what we were talking about over there on Apple. We got the perfect little ABC top formation, and here it is, 161.8, 130.9, right here at the dead center of the 1 standard deviation, right straight out of the manual. The manual, man, oh my gosh, you mean you have a manual? I do. If you go out and search on Amazon, just search for my name, Lan H. Turner. All this stuff that I'm talking about right here is documented. It's all there, right in the manual. So this stuff is following the institutional strategies like a train on rails. Just, yeah, we knew it would. We knew it would, right? This is what we're looking at right here. The market went up in this big, massive run off of the accumulation zone. It caught us unaware. I mean, I have to admit, hindsight, everything's easy to see in hindsight and say, oh, of course, I saw it, Lan. I saw it. I saw everything. Yeah, right. Sure you did. Okay. It's hard to identify sometimes that a market's going to run like that, but we have to anticipate. And so the market went through a nice accumulation stage on many of these markets. See, look at that. Just as clean, as beautiful in hindsight as you could imagine. But when it's doing it, you're like, I don't know, the market's not going anywhere. It's just kind of dead. Well, that's what an accumulation stage is. It's a dead market. And it's not really dead. Underneath it, it's like boiling and roiling underneath, like like it's getting ready to boil. So it's like putting a cold pan of water on the stove, and you're just waiting, and suddenly little bubbles start to pop up, and then suddenly it's boiling and roiling like crazy. That's what accumulation is. It's an accumulation stage where the big banks and hedge funds are adding positions to their portfolio so they can sell out all the way up here because retail traders buy in. I'm going to do it. I can't stop myself. I have to show you. That's how they build their pyramids. They build down here. They buy a whole bunch down here, and then they sell out all the way up the trend. So who are they selling to? They're selling to retail traders that do this. The retail traders start out small down here in the accumulation stage. As soon as they get that little pop, the little MACD pops up and says buy, and so they do. And then as the market goes up, they add on, and build their upside down pyramid while the big investors, banks and hedge funds are selling out. So by the time you get up to the top of the trend, they're out of shares. They don't have any more. They sold everything, made all the money, and they've sold it all to the retail traders who now have an upside down pyramid. The market only has to go down 1 penny and you lost everything because you've dollar cost averaged all the way up that trend. All right. I'm telling you, I see people jumping out of windows right here because they did that. Right. Now, I know none of you did that because you've been coming to my class and you've been taught well that you don't do that. All right. So now we're starting to come in here and we want to start coming down in here and start going through the accumulation ourselves. But the market, this one has made the little ABC top up in here. Okay. It made this little ABC up in here. Now we got to wait for it to go sideways a little bit. There's got to be some accumulation. Now, the big banks and hedge funds are not the ones that drive what we call V recoveries. If we get a V recovery, which is just this market turning around and going right straight back up like that, that's not the big institutions, because the institutions don't want that to happen. Because if it does, then they miss out on their opportunity to go through another accumulation stage and buy into a whole bunch of shares. They want this thing to come down and they want it to go sideways. All right. And they want it to go sideways for a while. They would like it to go sideways. As you can see in the image, they have their accumulation stages and they want it to go sideways for a while. And then they want to rally it and go after they've already had the opportunity to buy a whole bunch more shares. So this is what they want it to do. But that's not what it always does, because you have a big block of traders, and retail traders are tiny. You and me, we're tiny, all right? We can't really do anything by ourselves. But when we're a group, when we're all added together and we're all doing the same thing and we're all working lockstep and barrel in the same direction, we're a big group, all right? We're a very big group. And it's the retail traders who get excited at these locations and they start buying on one little pop, and the market takes off and goes to the moon. All the retail traders jump on, and the big institutions are sitting there going, what in the heck are you guys doing? Would you stop already? Would you stop buying the market right now? I'm not ready yet. I don't have a bunch of things to sell to you. So usually when that happens, we get kind of a false run, and that's when we get a Fibonacci bow tie that's not very strong. All right, so you would expect a Fibonacci bow tie to come in and give us a full, come on, auto scale off. So then we come in here and see this thing come up and give us a full 100% projection. But if we don't have institutional support on that, it doesn't go up there. And that's when we generally get these little tiny, they go up and if they even break the high, they're little tiny ugly Fibonacci bow ties. So they go up and they barely break the high. And that's when you get these little tiny tops like that on the bow tie. You don't get a nice big projection. So that's because you don't get a lot of institutional support, because it took off too fast and they're out already. They don't have anything else to give you, so that they can't support you selling, buying more positions. So, it's retail traders' exuberance that causes V recoveries, and we don't like V recoveries because you can't get back into them. I mean, you can. I mean, we talked about that strategy where you go in and start day trading into them and using a single day as your stop, and you can get into a trend like that if you want to try and get into a trend like that. But generally speaking, we don't like to do that. We like to get our own accumulation going down here a little bit. Now, we might not accumulate like a big hedge fund, but we're still going to try and buy a few shares down in here as the market comes across, and then we're ready to go when it starts to run again. So that's buying low, selling high, and that's the name of the game. I tell people all the time, I'll tell you the secret. I'll tell you what big hedge funds and institutions do. And what, Lan? Tell me the secret. They buy low, sell high, and then people start to laugh at me. I'm like, why are you laughing? I've heard buy low, sell high my whole life. And I'm like, well, then why don't you do it? Why are you always buying high and trying to sell higher, or not even selling? You never sell. You just buy up the trend, and then you just let it all flush all the way back down, and then you sell at the bottom and sell it all out and lose all your money. Why do you do that all the time? Time and time at the end. Why don't you ever learn? Just buy low, sell high. Oh, yeah, that's so funny. Buy low, sell high. I don't know. I already know that. You didn't tell me a secret. Well, then why don't you do it? All right. So that's the name of the game. And that's what we're looking for. So there's the chance that we might get a false run here. And that's all I'm saying. Be careful. If you want to try and trade it a little bit, if we think that market's going to bounce off of this it's coming down here, it broke the 50%, it's headed to the 61.8. So if you want to buy a little 61.8 here, I think we stuck in a call option at 50%. and it's down a little bit, 227. So we're sitting on a little bit of drawdown as this market continues to fall. So you're adding a little bit in. If you want to add another one in, if it comes down, hits 61.8, you can add another one in down here, sell another or buy another call. We got some puts here that we sold. This just says that we'll buy some shares right there. That wouldn't be a bad place to own some shares. So if we get assigned our shares on that Amazon, we wouldn't feel bad about that. Get 100 shares, then we start doing some covered calls against it. But we'd get $216 in premium, and then also get our shares. So that would be cool. And then this would just be a long call. If the market keeps coming down, well, and the long call, though, is 99 days. So where is this market going to be? Is it going to be low down here somewhere, or is it going to be back up in here somewhere? See, this is catching a falling knife coming down here. That's why I'm trying to avoid having you do that, because I think the market's going to, if anything, we'll probably get a little ABC. Well, we already got the ABC pattern in here. I think we're going to get a little bit of this type of action. So be careful, be mindful, and that's what we'd like anyway, if it would come sideways a little bit. Usually when markets rally like that, come back down, they kind of go sideways at the 50% level, go through a small accumulation. Sometimes they'll come out here and then they'll do a little dip down in here, so be mindful of that, and that's called our spring, and then that's when they take off and go like a rocket ship. That's kind of a little foresight of what we're anticipating, what we'll look for, and how we're going to try and trade these markets. But we have to wait and see. We got the little yellow dots coming in here, and as it crosses the little yellow dots, those are signals. We've also got the bulls and bears, which is a little bit less aggressive and this counting the Elliott waves a little bit more cleanly. So you can see we've got, let's get rid of all the drawing tools. You can see we still got a blue light's way up here. It's got to cross that blue light. Usually remember, the blue light and the yellow light, they come together. They converge at the location in which the market turns. See how it converges right here? Those two almost come right together. But it had this, see how they come together? And they're so far apart right now. They haven't come together. See how they're trying to come together right in here? These are kind of still far apart. But that's the idea, is those two kind of come together, and then that's kind of a point of conversion, convergence, where those two give you the turnaround point. But right now, since this was a higher high and this is a lower high, this right here has to be labeled. This is an X1S, X1S, A1, right? X1S, A1. That's on the Amazon. We didn't get that we haven't got that on the Apple yet. So keep that in mind on Amazon. Avico Broadcom. We're going to go look at that one because this is a really good one. I had a bunch of money up on this one. This is actually real for me. Only mine are profitable. The ones I put in here, I put in late. I think mine are back here a little bit farther. And so mine are actually still making me money. But this is the one that we put in for the class. And it's underwater a little bit. But the thing is that we had a whole bunch of money up here. And I couldn't get out because the spread was so wide. It took away all the profit. There wasn't any profit in it. So the spread got so wide, we couldn't take our profits when it was way up there. So now we're kind of just sitting on it, and we have to wait for it to get to expiration. Do I think it's going to come? Do I think Broadcom's going to come all the way down here and threaten us down in here? No, I don't. Could it? Sure, it could. And if it did, I'd get some Broadcom shares down in here. And would I feel bad about that? Not at all. But I don't think it'll come down there. We're coming down and bouncing this 61.8 right now. So I think we're going to get kind of a little rebound. We generally get a rebound at 61.8, whether it's a strong one or a weak one. We'll have to wait and see. We don't know. If it comes back to 38.2, just to the top of but it would be our first pullback, and then on a rally. And technically speaking, you have to count it what it is. It's come straight down like a rock. But it would be your X1S A1, X1S A1, and historically speaking, X1S A1s are bad places to buy in. So if that's X1S A1, we might get a small bounce out of it, and it comes up to 38.2. But then, generally speaking, it'll flush back down one more time. And how far down will it come back down? I don't know. Nobody knows. It's just, in the past, this is what markets have done. So if we look off past performance, which is not necessarily indicative of future results, but it's the best we've got, right? So XSA1, and then if it comes off of here, down in here somewhere, this would be our X2SA1. Now, it might be shorter, it might be longer, might go through an accumulation stage like we talked about earlier. We don't know what it's going to do. So that's why we do dollar cost averaging. So if you want to add one in a little bit here at 61.8, you're not going to feel bad about that. Add a share or two in. I mean, it's $374. If you want to buy one share, that's a $375 investment into Avco. That wouldn't be a bad thing to do. If you got a little bit more money, buy 2 or 3 shares. If you got more money, buy 100 shares. $37,000 at 61.8. That might be a small amount for some people. Maybe they work in 100 share blocks. So, but depends on what your portfolio is. And if you're in a brokerage firm that allows you to do fractional shares, you could put $50 in. But right now is a good time to put a little bit in. If you want to put a little bit in, you're catching a falling knife. Remember, at 61.8, and we would expect a little bit of a run. At least that way you wouldn't feel like you if it keeps coming down that you're hurting yourself. But you're also not going to miss out if it does turn at 61.8 and start to go back up. That 61.8 is a strong floor. It's the bottom of the 1 standard deviation. So the 1 standard deviation is between 38.2 and 61.8. So it's the very bottom of the 1 standard deviation. If it goes out the bottom of 61.8, it's going into red territory. It's going into negative 1 standard deviation. It's going back farther than 1 standard into the 1 standard deviation. It's going into negative standard. That's the second negative standard deviation, or the first negative standard deviation. So that would be 2 standard deviations away, but this is your 1, so this would be 2 going this direction. So this would be your, I call it 0. So this is actually the Fibonacci sweet spot, and then 1 standard deviation outside of that would be down here. So it depends on how you want to look at it. This is 1 standard deviations, 2 standard deviations, 3 standard deviations, or you call this one 0. This would be 1, and then that would be 2. And usually I'll call this one 0, and this is 1 and 2 for me. That's the way I like to look at it. Just depends on how you want to label it. I see people label them all different ways. All right, so that's Avco sitting right at 61.8. If you want to buy a call option right there, we did yesterday. We bought a call option yesterday. So it's a little underwater, but hey, you could buy another one. Who knows? This market could turn and blast off and go to the moon for a little while before it comes back down. Or it could just go, that could be the bottom, and away it goes. That's just the way things work. All right, Palantir. Let's go look at Palantir. We're really frustrated with Palantir, but I think Palantir, looking at it right now, you guys tell me, I don't know, but that looks like an accumulation stage to me. That looks like somebody's winding up that thing like a top, and it's getting ready to rocket ship out, right? This is your accumulation stage, and then generally speaking, we get a nice Wyckoff spring, and then that thing goes up like that. Now, I thought this was going to be the Wyckoff spring right here, but this is charm 1, charm 2, charm 3. So that I got excited. I thought charm 3, this thing was going to take off and go. But then the market, the whole market overall kind of threw a damper on everything as it came down like this. So we can't have something like Palantir go shooting up like a rocket ship when the stupid QQQs, which it's a part of, right? Actually, Palantir, is it in the Qs or is it in the S&P? I think it's in the S&P. So when the S&P comes flushing down, you can't have Palantir go flying up. So that's why it got held down. That's why I think the third time's a charm. I think that's why the third time a charm has failed that time. Because this is charm 1, charm 2, charm 3. And usually that's what we look for when we're looking for an accumulation stage. For 2 false breakouts, and then the third one is the one it usually goes on. Okay. So that's the accumulation stage. And that's what I think is happening. And I think the reason this is coming down right now and going through probably another Wyckoff spring, I don't know. We may get some downside, more downside on here, as if SPY right now we're getting that same. If we look, it's basically the same distance. We just see it's 1, 2, 3, 4, 5. We've got five red bars there, and Palantir now has, if you look at this, 1, 2, 3, 4, 5, 6, 7 red bars. So it's kind of the same structure that we're seeing over in the SPY, right? Same structure. So when this one catches, now again, if we look, this is our setup for on the S&P. This is our Fibonacci bow tie, and we got this thing calculated to come down into this region here. So is it going to come straight down there? I don't think so. I don't think it will. Doesn't mean it can't, certainly can. Just because land doesn't think it's going to, doesn't mean it won't. I mean, I don't drive the market. I just read it like you guys do. And past performance, I've looked at these things. They don't generally come straight down to things. Now, doesn't mean they can't. Look at Avco. Avco did exactly that. Came right down to 61.8 without having any little ABC top. But then you had Amazon that did give us that perfect, beautiful little, right straight out of the manual, little ABC top, right? So is the Qs or is the S&P going to come down and give us a little ABC top? Usually it's more likely that it's going to do it than an individual stock, because it's a conglomerate of a whole bunch of stocks, 500 stocks, right? So more likely you're going to get an ABC top formation like this. So where are we at right now? We should be bouncing off of that. It looks like to me, if I eyeball it, it looks like it should be right somewhere around the 38.2 or 23.6. Where is it? At 23.6. That 23.6 is hard to see. Let me make it better, easier for you to see. 23.6 right here needs to be, that's right now a little purple line. It's a little thin. Let's make it a little thicker, little thickerer. Can you see it a little better? That's kind of a, can we get a little brighter one? How about magenta? Woo, that's pretty. Save, update all rulers to add magenta. Okay. So there's your 23.6. All right. So it's touching it right now. I would like to see it come all the way to 38.2. Is it going to do it? I don't know. Depends. I would like to see it come down to 38.2. Why? Because it's a mathematical model that I see. And when I was in the Chicago Board of Trade, that's where they said it would like to come down to. They want them to come down to 38.2. So if they like it to come down to 38.2 at the Temple of Finance, I like it to come down to 38.2 in Land Turner's own personal trading. That's all. So I'm just here, a little, fly on the wall, telling you what I heard when I was back there. They said they like it to come down to 38.2. Okay. So 38.2, back up to 23.6, back down to 61.8, just like that. That's what they want to see. So that's what I want to see. If it bounces off of 28.6, 23.6, the market's still a little bit too strong. Doesn't probably go back up and make a double top, and then maybe come back down to 38.2 or 50%. And then we'll start getting this little thing up in here. It's just a little bit too strong, a little bit stronger numbers. So you get a little bit higher numbers on the overall. It just kind of rotates things up. If it comes down to 38.2, then it comes back up here. You're going to have a lower high rather than weighing up there to try to test the previous high again. And then you get a bigger drop back down into here, which is what we want. We want to see it come back down into this region here. We'd love to see it down in there and go through an accumulation stage, because that's where we could start buying into the market and getting a little bit bigger position and feel a little bit more comfortable about it. For us, it's about comfort. How confident am I the market's going to not flush anymore, right? Because we don't want to put our positions in and have to sit through a big drawdown. So we want to wait and see if we can't time it a little bit better to get in a little bit better location down here. And if it would come down into these regions, we'd be a lot more comfortable with that, right? And so that's why you sell options down in there, because you can come in here and you can say, well, I would be really comfortable buying. Of course, you got to be comfortable with 100 shares, right? Some people aren't comfortable with 100 shares. That'd be $69,000 that you'd have to put in for 100 shares. And that's the smallest amount you can do in options. It's just the nature of the beast. So you come in here and you say, I'm going to sell a put option, and I'm going to sell my put option. You're just going to come and drag and drop it. Sell my put option right down here. This is where I want to buy 100 shares right there, 61.8, right at the Fibonacci location. And they say, well, you probably can't, it's probably not going to come down there. Well, if it doesn't, then I want my $483 in premium. But if it does come down there, I want my shares. That's where I'm willing to buy 100 shares of SPY. Well, chances of that happens pretty low. In fact, we could even tell you what it is. Come down here on the scale. There it is. The chances of that happening is 15% chance you're going to get your shares. Or in other words, 84% chance you're not going to get filled your shares. 15% chance you are. So 84% chance you're going to get your premium alone and no shares. So $483. Sell that right there. If that thing comes down, you're going to get yourself, and lands underneath, hits the purple line underneath the red line, you're going to get yourself 100 shares of SPY, which nobody would feel bad about owning 100 shares of SPY at that point. That's a really good discount right there. And if that doesn't come all the way down there, well, you get $474. Can't complain about that. The only problem is you got to be ready to buy those shares. You got to have enough money sitting in the sidelines to buy $668,000 worth of SPY. And you're like, well, I don't have that. Okay, well then you're not going to do it with the put option. All right, so that's what we're looking for on the S&P, and that's why I think circle back around, weave back in. That's why we're looking at Palantir coming down like it is, and I think that's where that's at in that Palantir. So we got a covered call up in here, and we're going to collect some premium on it. We're up $49 on our covered call against $210. We're a little bit late to the party putting our covered call on there, but nonetheless, we got a covered call on there, and we'll get our $210 off of that thing as long as the market doesn't turn around and go to the moon. But it's okay. If it does go to the moon, we have 100 shares. And if it goes to the moon, we'll make a whole bunch of money. We'll still get our 210. We'll sell our 100 shares out at that red line. Will be max profit. Because how much would that be? Well, if it went up from here to here, 100 shares, that'd be $2,235. We'd sell them right there and still get our $210. We'd make $2,435, and we wouldn't be sad at all. $250, $2,250. We wouldn't feel sad at all about that, would we? I don't think so. That'd be a nice trade if that happened. Otherwise, we just have our 100 shares sitting here so that we can have a covered call. And if the market turns and goes down a little bit more, well, we sell another covered call. Then we sell another covered call. And then we sell another covered call. And we sell another covered call. And we just keep selling covered calls until the market turns around and goes back up again. And then we sell our shares. So we sell our 100 shares. Or you can roll it out. You don't have to sell your shares if you don't want to. But it looks like to me an accumulation stage. But it can't rock and roll until the underlying S&P rocks and rolls. It's got to go too. It's got to turn. It's got to go back up. So we might have a couple little drops in here, which is going to probably force Palantir to have those same little. We might get a little thing like this. If the S&P does a little thing like this, Palantir will probably do a little thing like this. We might end up with Palantir down in here somewhere. I wouldn't be surprised to see Palantir right down in here somewhere. That's not what I wanted. I wanted this one. 130.9 or 100. Yeah, but it'll probably do it in an ABC pattern. Probably see it go up and then back down. But that's only if the S&P does the same thing. If we get kind of a little bump on the S&P and then the S&P comes down here. That's probably what we'll see Palantir do. Palantir will probably just follow the S&P. All right, so that's Palantir. Let's go to a Rackspace. This is one that we picked up. Why did we have a Rackspace on here? I can't remember. Can't remember why we had this. This is not one of our typical ones that we look at, but it's a beautiful little chart, isn't it? Rackspace. Oh man, it took off like a rocket ship right here. The only indication it didn't break the little yellow dots. It just kind of went red for a couple, and then wham! I don't know what that was. That might have been an earnings. It might have been a news report, but now it's going through a little pennant formation. Don't know a lot about this stock, but it's going into a big old pennant formation. So you got to be careful because that could be this or this. And that's what pennants do. Sometimes they come down here and do this, and then they go like that. That's really common. Sometimes they do this too. They go up here and then flush way down here. They do all kinds of things to trick you. These are tricky dickies. That's what they are. All right. They're kind of trick you out of what's going to happen with your money. What are you going to do with this? I don't know if you do anything with it. But right now it's in the state for it's definitely a buy signal. I don't know if there's any options on this thing or not. Let's go see. 36. If we do an option, a call option, you could do some put. Sell a put against it. Premium's really not there. Like there's nobody trading it. Zero volume today. There's a lot of open interest. There's just nobody's trading it today. So you could buy a call option. This is gonna just come in here, and look, they're only $4. Oh, this is a $5. Oh, this is a little toy market. It's only $5. This must have been one of the ones that we caught in our day trading yesterday. Let's put a call option on that thing in case it wants to explode out the top. Oh, it's $195. Well, what's the big deal? Oh, that's only 1 day. We don't want a 1 day. That thing keeps switching on me. I've told the computer programmers about that it's not sticky. I want those numbers to be sticky. If I put on 36, stay on 36. But they know about it. They've been told, and they're all, oh, yeah, it's supposed to stay sticky. Sometimes it does stay sticky. So now it's 36. So let's come in here. And it's 36 days. We're going to go on this one. We're going to just buy this real quick just for kicks and giggles. See if it'll let us have it with a market order. No. Yeah. Okay. We got a little call option in case this thing breaks out the top and runs again. Will it? Oh, who knows? That's why I use an option. Okay. Max loss is $175. It's the max amount of money we can lose, and we got unlimited profit potential if this thing takes off and goes. All right. I think this was just one of our day trades from yesterday. Markets that kind of, or let's see if we could sell a put. We could come in here, sell a put. Come in here, sell a put. Come on. Give me my puts. And I don't want 36. Well, I guess I have to. 36. So that's only $90 at the money. Not very much, but hey, if you got a small account, we're dealing with a $5 stock, and there's not very many. Look at the spreads, $20, and you're only going to make $90, and then you're going to lose 20, and you're going to lose 20 on the other side. That's $40 out of your $90. You can't do it. I don't know. Can't do it. All right, let's go look at Tesla real fast. Tesla. Oh my goodness, Tesla. We all love Tesla. Tesla's in the same situation as Palantir. I think it would have been fine, but the market flushed. So, it's in the S&P 500. It is what it is. It's gonna flush when the S&P flushes. So it's just part of the flush. So when you come back to Tesla, you're like, well, where do I want to buy it, Land? Well, look at that. It touched the 61.8. I'm not going to say train on rails. You can say it, like a train on rails. Look at that. Came right back down to just like it was designed with a computer, because it was, which is what I've been here telling you the whole time, which is the reason why you come here and listen to me, because I tell you everything's done by computers. And they've programmed in all these numbers into the computers, and that's why markets go to these levels. All right. 2 days it's hit that 61.8. Is it going to break down and come down to 78.6? If it does, it's past the floor. This is actually the floor. Okay. This is what's considered by the institutional hedge funds. That's the floor. That's as low as it's supposed to go. If it goes down lower, now it's gone into negative territory. Again, this is zero territory. It's come down from positive territory up here into zero territory, one standard deviation. And if it goes down farther, it's negative territory. Now, they like to push it down into negative territory once and again because they can buy cheaper down there. Because, if it come down here, a lot of retail traders will hang on to 61.8. But if it goes to 78.6, they'll sell. That's what they want. They want you to sell your shares at these low prices to them. All right. They want you to buy high and sell low. So they want you to lose money because you lose money to them. That's who you're losing it to. When you lose money, who does it go to? It goes to the big institutions. It doesn't go to me. I'm just another one of you. All right. So it comes down here. This is even a better buy place for us because that's where they're going to be buying, right? They like to buy down there, but this is their floor, 61.8. Market goes up, comes back 61.8. That's the floor. Anything below the floor is zero. All right. It's going negative. So we're right at zero at 61.8. So now, generally speaking, this is where you'll see a bounce. Market will generally bounce off of here. Retail traders, a lot of retail traders know about 61.8. A lot of retail traders know to draw their Fibonacci rulers in there like that. That's pretty common. That's been taught pretty well across the board. Of course, there's a lot of retail traders that don't know anything about technical analysis, and so there's a lot of them who don't know why it does that. They're like, oh my gosh, they have no idea. They don't have any Fibonacci ruler on there. They just look at it like this, and they don't have this either. They don't have cheat codes, so they're looking at it like this. This is what their charts are looking at. They're not drawing trend lines either. Now they're looking at the news. Oh, what's going on in the news? So they're running out to CNBC and NBC and going, CNBC said the market's going to go up. Oh, NBC said the market's going to go down. What do I do? It's going down. I'm going to sell. Get rid of it. Okay. That's what most traders, retail traders, are like. But you guys are not like most retail traders because you're here at a school getting the right schooling. And so we like to turn on the cheat codes, I call them, Heikin-Ashi bars, right? Now we see the trend a little bit more clearly. We got the average true range laying on there, which is the little yellow dots. If we want to see the Fibonacci stuff in a cyclic trend, we turn on the bulls and bears. And now we get the bulls and bears turning on the price bars red, yellow, and green, which is telling us the Fibonacci is bullish or bearish above the neutral zone, right? We talk about the zero neutral zone. That's what the yellows are. And then anything below the neutral, below the yellow is red. So that's why these are all red, because they're below the yellow. And anything above the neutral zone, well, that's green. Okay, that's how the bulls and bears work. So the market just went big yellow here, and now it went red. It's down in the red zone. So that's the rolling Fibonacci sequence. All right. Now the last bar is always yellow because we don't know whether it's going to close red, yellow, or green. So it's always yellow until it closes. But that's how the bulls and bears works in track and trade. And then you have the blue lights, which are counting the trends. So we're getting the little, this is perfect. I mean, it's just like, look at this. It's just one drive. You got your counter trend up in here. You got your little ABC pattern up on top, and down it comes right back down to 61.8. So it's a classic little pattern that it's in the manual. Go get the manual. Actually, this one's probably in the supplement. If you have the manual and you don't have the supplement, tell me. I'll give you well, if you want the supplement and you don't have the manual, the supplement's free. Just go over and get it. You go download it from pitnews.com. Go to pitnews.com, and go to the store, or sfomagazine.com, either one. Go to the store and you can just download it. I think it's there. If it's not, let me know and I'll just give you the link. The supplement's free. I don't even ask you for your email address. Everybody, you go to all these other YouTube channels and they're like, we got this thing that's free for you. All you have to do is just give me your email address so I can send you a whole bunch of spam. No. And then if you don't respond to me, I'll sell your email address to somebody else who will send you a whole bunch of spam. And then I'll sell that email address, and then they'll sell that email address, and that's how you end up with a whole bunch of spam. But I'm not that guy. I'll give you stuff. I don't even ask you for your email address. Why? Because I don't want to send you anything. I trade for a living. I don't send out emails for a living. I don't care if you buy my shit. I don't have any shit to sell. Just a trader, just a dumb little trader sitting out here telling you what I do. I'm not here to tell you what to do. I'm just here to tell you what I do. This is what I do. And it's served me pretty well. I got a pretty good life. I haven't worked for 30 years. I don't know how to work. I don't know how to have a job. This is my job. This is what I do. I trade, and I don't sell you anything. Of course, I used to sell the trading platform, but I needed you guys to help me pay for the trading platform for the development. But it's pretty much developed now. So I don't know. This is a good little trading platform. If you guys got your trading platform, this is the one that I use if you're interested.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right. Does anybody have a stock in particular that they would like to look at? Go ahead and throw it into the chat, and I'll move on from here, and then I'll look over at the chat here in a minute, and we'll go look at some of the charts that you guys have in your head that's on your charts that you're interested in looking at, and we'll go do some counts and measures and see what they look like. Show the class what you guys are trading. Let's see what you're trading. Come on. Put them up there. All right. Let's go look at we're going to do a little bit of day trading in here too. I thought it'd be fun because yesterday we looked at the day trading. We talked about stocks, but it was during power hour, and power hour is no fun to trade in the stock market. So let's come over here and we'll pull up our little, oh, this is the wrong tab. Let's pull up our little FinViz. Oh, Kirk's got one. Oh, John's got one. Let's throw, while you guys have your numbers up here. And then if we have a little time, we'll go look at the day trading stuff. So this is NVIDIA. John came in with NVIDIA, and NVIDIA is classic, right? Straight out of the manual. I mean, it's the nice little ABC pattern, right? Go up here, little ABC, and up for the second drive, and then it came down, making a little ABC top formation, and it's coming right back down. This thing's just, it's like somebody at the BlackRock back in New York City drew that one on a chart with a crayon. I mean, that one is so classic, so classic. All right, that little run there. And we're right back. Look at that, 50%. It's sitting dead center, guys, right dead center of the zero zone. Right dead center. So what do you want to do? Well, it's an ABC. So this one up here, John, what is that? X1S A1, right? X1S A1. Low probability of success. We don't take X1S A1s. Now, we want to. When they're forming, you want to take them so bad. Oh, my gosh, do you want to take an X1SA1? Oh, you're going to feel FOMO. Oh, you want an X1SA1. But we don't know it's an X1SA1 if the markets perform like this, because it looks like a C1, doesn't it? Because this would be your A1 right here. But we only know that's an X1SA1 because we have hindsight. This is an A1 right here. And then it went straight up, and then this becomes, it broke here. This is a B1. And so technically speaking, we would be calling this C1. And it's a C1 fail. And so we didn't know it was going to fail until it did. So that's a C1 fail. Come on, can you do it, Land? Can you get your little tail in there? Yeah, poke it in there. Okay, that's a C1 fail. So it failed, and when it failed when it broke below the 38.2, which is actually this low point right here. So see that low point, that low bar right there? See how it came down there? It hit 38.2 just like it was programmed to do it. And then it took off and went back up, created the C1. But then when it came back down and it broke that right there, that first bar, it's got to break that little low right there. And it breaks this, comes back up, breaks that little low right there when it's no longer making higher highs and higher lows, now making lower highs and lower lows. That right there was your signal that this was a C1 fail, which turns this into an X1 SA1. All right. So if that's an X1 SA1, we don't want to take it. And maybe because it failed, you wouldn't have taken it. I don't know. You've probably taken it on that C1. We'd probably gone long on there and got stopped out. But it did go far enough we could get our stop to break even, and we would have been okay. We wouldn't have lost money. Hindsight's 2020. Who knows? But anyway, that's what we're looking at right now. So if that's an X1 SA1, it's coming back down here to a 50% level. 50% is dead center of our one standard deviation. Now, is it going to come back down a little bit farther and hit the bottom of the one standard deviation at 61.8? I'd like that. I'd sure like to see it happen, because you could, that's your floor. And if that's your floor, anything below that, that's like getting a discount on your shares. You're getting it below zero, right? You're paying zero for it. Now, anything down here is negative. So you're getting, let's say this is $1 down here. This is 78 cents. You're paying 78 cents for something that's worth $1. Think of it like that. All right. So that's your floor at that 61.8. And you see that 61.8 come back right across the top of all that accumulation zone, which was in here, all this big long, and I'm not going to really call that accumulation zone. I think that that's just chop, because it just went for a long time. Of course, I'm sure it's probably an accumulation zone, but that's a long one. 1, 2, 3, 4, almost 5 months of accumulation. We don't generally see that. Usually accumulation is like 3 months. You go 5 months of accumulation, you start to question whether it's accumulation at that point. But with a run like that, you can look back in hindsight and say, oh, that was accumulation. So you never know, right? It's all just scientific wild ass guess what you're doing here. So we just kind of want to be as scientific about our wild ass guesses as we can. I'd like to see it come down to 61.8 on NVIDIA. And then at 61.8, man, we could back the truck up. We could sell the barn. We could sell a few cows if it would come down to there. That would be a great place to own some NVIDIA, right? And we got these orders in here saying we'll buy NVIDIA here and here. So we put these in here. Now they're little, they're a little underwater, but that doesn't matter, because we're not going to, these numbers don't apply to you unless you bail out early. If you bail out early, then that's how much you're going to have to give back. See, they gave you 325, and if you bail out, you have to give them back 250. So that means you're still profitable. You're just going to have to give them back more than they gave you. They gave you 325. They already gave it to you, and you have to give them back 245. So you're not actually losing money. So that's how that works. It shows that you're losing money, but you're not losing money. They gave you 325. You have to give them back 245. That's still a profit, because that's the time decay. All right. So market value is 570. So anyway, that's the nature of the beast. You can see it in my spreadsheet. Here, I'll show you my spreadsheet, maybe, if I can get to it. Maybe it's available here. Oh, I got a new scanner too. I created a new scanner yesterday. I don't know if you guys care. And it might show up in the SFO terminal. I create all these things just for fun to see if I can do it, right? And then if I like it, it'll end up in the SFO terminal, so you guys can have it. So I created this is a little scanner that scans the options chain. We talk about the premiums being more expensive and the strike prices and all that kind of stuff. Talked about that at nauseum, right? So that's what this is scanning for. It's saying right now on Meta, NVIDIA, and Avgo that the long calls are less expensive to buy than what the theoretical value is. That's all that's saying. But that's saying by how much? By 3.7, 7.2, 29%. So this is telling us that, then this is just the Fibonacci numbers that I've got in here. But it's telling you that the market, you can buy call options for less than what they're worth, which is what you want to do, right? When you buy calls, you want to buy them for cheap. And when you sell puts, you want to buy them when they're expensive. So all this does is looks to say, hey, go look at Meta, go look at NVIDIA, go look at Avgo, because these options are less expensive. Although that's not what I was going to show you. I was going to show you, let's go look at why we're here. Let's go look at, this one said Meta, right? It was at the top of the list. Let's go look at Meta. So you can buy some Meta options. Oh, that's why. When a market's going down, the calls are cheap, right? So if you want to buy some calls, you want to buy when the market's going down. We've said that a million times, but nobody wants to buy a call option when the market's going down because the market's going down. But that's what makes the call options cheap, right? That's what makes the call options cheap. So this NVIDIA is sitting at the 78.6% floor right now. See that? It's you can, if it's worth $1, you can buy it right now for 78 cents. It's cheap. You want to buy a call right now? That's what this is telling us. It says, hey, if you want to buy a call right now, they're really cheap on Meta. They're really cheap on NVIDIA. They're really cheap on Avgo. Go buy some. So that's what that's telling you. There's just a little scanner. So let's do it. Let's come in here. Let's come in here and see if we can get us a 36-day. I don't want to do 36 days if I'm buying a call. I want to do 100 days. So we're going to come in here, buy 100 days. It's $4,000. We want to buy calls. Do we want to buy it at the money? Let me see what my scanner says. Scanner says buy, the one that's cheap is the 500. So it says buy this one here. This one here is the cheap one. That's pretty deep in the money. It's like at a delta of 74. So that's 74 cents. That's $8,000. Woo! That's a spendy little booger way down there. But that's the one that's cheaper than the rest. It's the one that's outside the boundaries of saying, hey, man, this thing is $8,600. You can buy it for $8,500. So it's cheap. So let's go ahead and we'll buy that. Okay, so we just bought ourselves a long call on Meta at the 78.6% level. Let's see, what else did it say? Should we go do the others? I haven't forgot about you. I haven't forgot about you, Kurt. We got ASTS in here that we got to go do. I haven't forgot about you, but we pulled this up, so I figured that while we're here, that's Meta, NVIDIA. It said we should buy. Which one did it say we should buy? It said it gives us on the options chain. When I open it up, it says it's got 3. It likes 170, 175, and 180. Now this one's 11% out of the money, 13% out of the money, and 16% out of the money. So the delta is 83, 80, and 76. So it puts them in order the way it likes them. It doesn't put them in order of like from high to low. It doesn't like any of those. Those have all been rejected. Don't buy those, land. Buy these 3. So let's go and see on NVIDIA, because we were just talking about NVIDIA. And you could look at it yourself. It's just scanning between premium and the theoretical here in Track and Trade. That's all it's doing. I just take those numbers and I have my little scanner do it for me. Just lazy. So why? Because I can. Because I got AI. You can do it too. You can write your little AI scanner that scans the premium and the theoretical value, and you see the difference. All right. So now we're coming in here, and my goal is to give these things. You guys who don't know how to program in AI, that's okay. I'm trying. That's why I'm creating the terminal. Terminal will have. I'm going to just keep putting all these little scanners in there for us. Right, as I build them, but it's not done. I just barely finished it yesterday. I mean, literally, I wrote that yesterday. All right, yesterday. So NVIDIA said to buy one. It's at 50% right now. We could wait for it to come down to 61.8, or we could buy 2 of them. We could buy one at 50, and we could buy another one at 61.8. So remember, it's not at the floor yet. It's still sitting at 50. So now you're paying for something that's $1. You're paying $1.50 for it because it's more. Down here, you're paying 78 for that. 61.8 that's 0. That's where you want to buy everything. 61.8. Anything down here, you're getting a discount. Anything up here, you're still paying more money for it than what it's worth. All right, so let's come in here, go to options. We want to go out to 90 days. We're going to buy a call. Let's come down here, look at our calls. And it said to do, which one did it like? 170, 175, and 180. So let's go look at the 175 first. Oh, that's way down here. Let's buy that one. That's way down there. Or it says it said you could also do the 175. Oh, that's the 175. Oh, it says you could do the 170. So we go 170. That's $3,900. It's got a delta of 79. But it likes this one here the best. The 170, oh, the 170 is its favorite. It likes that one. And then it likes this one, 175, and then the 180. I like the 180 because the closer to the money. Less money too. $3,200 got a delta of 72. So it's gonna make 72 cents for every dollar the market moves, or lose 72 cents for every dollar the market moves. Of course, convexity, if it keeps coming down, convexity will go down. We'll lose less and less as it comes down. It goes up, convexity will go up, the delta will go up. We'll make more as it goes up and up and up. That's what's cool about options. Delta will change whether the market's going up or down. All right, should we buy one of those just for kicks and giggles? All right, the market would have to turn and go bounce off of that 50% to make that valuable. If it doesn't, if it keeps coming down, then it's got to bounce. This is good for 100 days, so buy the order. Let's see. We'll just knock one in. All right, we'll mark that one. Oh, duplicate securities, multiple orders. Oh, I already got one right there. Oh, that's a sold one. I can't do that one. Okay, let's cancel that. We'll buy a call. Can't have that there. So we can't do that one. So we've already got something on that one. So it says our second favorite is 175. Let's do that one. We'll just mark it into that one. Is it going to give it to us? There it goes. All right, we got that one. What was the other one that it said that it liked? It liked Meta, NVIDIA, and Avgo. Did we already buy an Avgo? I think we got plenty of Avgo. Oh, yeah, we already have an Avgo. All right, so the next one we got to go look at is ASTS. ASTS. There's a lot more people in here watching than what we got people throwing up symbols for us. We only got 2 people throwing up symbols. We got a whole bunch of people in here watching. So some of you guys can throw up another symbol. We'll go look at it. Come on, ASTS. ASTS. Space Mobile. What's that other? Isn't there one called Space? We used to trade this one. Wasn't it Space? What was the Space one? Oh, it was Space was it wasn't an ETF. It was a note or something, and it was only good for a certain amount of. It was only good for like 2 years or something. Then we can't trade Space anymore unless it turns into. I can't remember whatever happened to it. ASTS. Space Mobile. Well, Space Mobile. What a pretty little chart. It likes to have little runs and then massive pullbacks, doesn't it? It's pulling back the same as like the QQQs. Although ASTS, I don't know anything about it. Don't have any background. Should we see if we can find some background just for fun? Let's go over. And let's go over to, we keep talking about the SFO terminal. Let's go use it for a second. SFO Magazine. So here's the terminal, log in, land. Uh-oh. I changed the password. I didn't write it down. Now I forgot the password. I forgot my own password. I was going to go into fair market value. You have to log in. It's the gold tier. What was the password? I had to change it yesterday because it got compromised, and now I can't remember what I changed it to. Man, now I'm gonna have to go look at the code and see what I did. Doggone it! Why didn't I write it down? Because I thought I would remember it. That's why. All right, we'll have to do that another time. Anyway, that's how the terminal's turning out. It's coming out. See, we got the SFO crypto charts. We got nav tracker. We got life expectancy. This is free for right now. If you want to go out and do the life expectancy, you can just go over here to sfomagazine.com/SFO, and that'll take you here. Because you have to go to the sandbox. It's not available to the public on the. If you just go to sfomagazine.com, it still takes you over to the old page. This is the current page. I don't want to call it the old page. It's the current page, SFO Magazine. But if you go to the sandbox, and you go to sfomagazine.com/SFO, you don't want to put admin in there because that'll take you to my login page where you can't get in because I don't know the password. So go to SFO. Now you go to the sandbox. So this is the new version of the website, right? So this is what it's going to look like. Now this isn't active. You can't do anything here. Actually, you can. I think the subscribe is active. If you came in and said, I want to subscribe to the bronze version, I think it actually works. Yeah, see, it'll work. It'll let you come in. Yeah, there it is. So you can come in, it'll check, make sure you're who you are. You got to send yourself an email or a text message or something. But then once you've confirmed, you can actually sign up for the bronze version over here. So this is actually functional right now, believe it or not. But it'll get you, it'll work. It'll put you in and give you the SFO magazine. So I see that's how close I am to functioning. So this isn't functional. This is not coming soon. Can't do it. But you can come over here. If you just come over here and don't go to the subscribe window, just go to the sandbox, which is sfomagazine.sfo. And you come in here, you can get to these. You can go like to the nav tracker. So you can get this one. This is free right now, for now. Life expectancy is free for now. This is the SFO currency. This is just a little crypto chart. It shows you cryptocurrencies for those of you who are interested in crypto. Track and Trade doesn't have crypto. We don't. Track and Trade doesn't do crypto. Oh, it failed to fetch, so it's not working. News search is kind of cool. This is like, this tells you all the news that's going on. There's like 48 articles today on YouTube Finance or CNBC, but what they do is they come down and tell you who's in the news. Microsoft's in the news. What did Microsoft do to deserve 3 articles today? Out of all these articles, Microsoft has 3 of them. NVIDIA has 2. Apollo has 2. Now, NVIDIA and Microsoft are in the market, in the news a lot, but Apollo is not. So they've got 2. Apollo, whoever they are, is in the news with 2 articles. So let's go see what Apollo's doing. APO it was, right? These guys are in the news for some reason. Why? I don't know. But usually when they're in the news, they get a little pop-a-rooney. Little Fibonacci ruler going action in here. We'll go from this one here. Came back to 38.2, starting to rally. It looks like, I don't know. Looks like to me it wants to do this. Down here, up here, and then we'll see it come back down here again. Possibly, because we're in a bearish regime, right? SPY, QQQ are down. So if SPY and QQQ are exploding, we would look at this more as the possibility of just going up again, like this. But right now we're in a bearish regime, so the markets are going down. So that's Apollo. That's in the news. For some reason, it's in the news. We go read the news articles and find out why it's in the news. But that's, in the interest of time, we're not going to do that. Anyway, I'm just showing you some of the things that you can get to for free. So you can't get to all this stuff for free. You have to pay for all this stuff. And you have to, it's locked behind gates. Gated. It's gated. And it's all because of the data. I'm not allowed to distribute the data. So you have to have your own data service. So you have to subscribe to something like either Portfolio Matrix or Track and Trade to get the free data. That's why when you come up here to the subscribe, it's the same price. Silver's $9.95, gold's $9.95. Why? Well, because you have to have different data services to get in there. And I'm not selling you the data services. I'm just selling you the software. You have to provide your own data service. Most of you already have your own data service, so there's no reason for me to sell you in a second one. If you don't, you can pay for. I'll sell you a data service. It's $500 a year, $600 a year. If you're going to pay that $600 a year to me, why would you do that? Don't do that. Just go get another tool that has a data service, and then we can port you in here. So Track and Trade, if you would like to have all these tools, well, it would be $600 a year plus $9.95 a year. So another $100. This is $700 a year to have all this stuff. But if you got Track and Trade, you're already paying that much money for the data. It doesn't make me any money. What's the point of me charging you $500, $600 when all I have to do is give it to somebody else? I don't make any money off of that. So there's no reason for me to do it. So I just charge the $9 to help me pay for my expenses of creating the platform, and then let you use your existing data service so you don't have to pay for data services twice. That's what I'm trying to do. That's why it's a little confusing, but the name of the game is let's save you a ton of money in the process, because you're my students. You're not, I'm not trying to rob you. All right. I'm trying to help you. All right. So, and it helps myself too, because I'm creating all these tools for myself, really. fair market value. I want to know what the fair market value is of Apollo. All right. So let's bring this back up. Where did we get to? Okay. So go play, have some fun. Oh, I was going to show you. This one's the fun one, life expectancy. This one will tell you when you're going to die. I know it's kind of rude, but it tells you when you're going to die so you can plan for your financial future. And so it gives you go in and you fill out all this information about, I smoke and drink and carouse and stay up late and drink beer and, all that kind of stuff. It asks you all that. Do you do that? And do you snort cocaine? And that's, do you do drugs? What do you do? Do you run every day? Do you walk your dog? What do you do? And it figures out when you're going to die. And then it gives you an estimate. Of course, it's based on life insurance statistics. So it gives you an estimate when you're going to die. And then it comes in and then it says, okay, let's talk about your money. And it asks you all these questions about your money. And then it says, okay, since you're going to die on this day and you got this much money, you can go spend this much money. Or, you better not spend any money because you're going to run out. You better have some more before you die. You got to go get a job. Or it'll say, hey, you got plenty. You're going to die on this day. You got all this money. You can spend this much money every month, every year, and you're fine. You're going to be fine because you're going to die on this day. So it's kind of a cool way of looking at, I don't know. I thought it was kind of funny and cool way of doing it. If you know when you're going to die, you can plan for your death. I mean, you can plan your money a little bit better. If you don't know when you're going to die, you're like, oh, well, I might live to 100 years old. Well, the chances of that are pretty low, especially if you're smoking and drinking and carousing and going out and snorting cocaine. You're probably not going to live to 100 years old. All right. So it'll tell you that. That's what's kind of cool. And it's free right now. If you go out there to the sandbox, you can go do that for free. Now, it doesn't save any of your personal private information. So if you put in there that you're snorting cocaine, well, you want to be honest because you want to find out when you're really going to die, but it doesn't save any of that information. I don't ever see it. It doesn't ever come to me. It's all stored on your own local machine. Nothing. See, it says right here, we respect your privacy. All calculations run entirely on your browser and no personal data is stored or shared. So it's all private. It doesn't ever come to, there's no server behind the thing that saves all this information. We don't care. I don't want to know if you're snorting cocaine, but you want to know if you're snorting cocaine. You want to put it in there so you know when you're going to die, right? And I don't ever find out if you do that. I don't know who you are. We don't even ask you for your name. You can go through it completely. You go through this. It doesn't even ask you for your name or any identifying information or anything. We don't know who you are. So, and it never comes to us anyway, because I don't want to put my stuff in there and have it sitting out there even on my own server. Why would I do that? No. So anyway, it's just fun stuff. Fun stuff. Everything's fun. We're all just having a lot of fun. All right, there we go. That's our StreamYard. Let's come back here. All right, what was the next one we wanted to go look at? Kurt wants to go look at ASTS. Did we already do ASTS? ASTS. All right, there's ASTS. I think we pulled that one up already. The only thing I can say about this, Kirk, is that it looks like to me it went through an accumulation stage while everything else was running hard, and then it flushed out the bottom, which is kind of classic of a. It's not even it's not even a classic like spring. This is more like what a spring is. A spring is more like this, where it kind of spiky dikey doos a couple of days and then goes back up. That's a spring. This is not a spring. This is more like, hey, what the heck happened? Something flushed out of here, and then they changed their mind, and then it ran with everything else. Really is what it did. It kind of took off and ran with everything else. Sympathy run. But we got a nice little signal right there down in that burrow pit. But right now it's sitting here where's it at on the scale? Did you draw your ruler in there? So we're sitting here right at the floor, 61.8. So if you can buy it anywhere below there, you're getting a discount. If you buy it above there, you're paying a little bit more for it than what the floor says it's worth. Anywhere below here, you're getting a discount. If you can buy it down in here, it's like VWAP, right? We trade VWAP on a daily chart, on an intraday chart. So let's come down. This is Palantir. See the VWAP line right here? That's volume weighted average price. Now, the way this works is, of course, we're on a 2-minute chart, and VWAP only works during the day. But big institutions follow VWAP. And if you send in an order to a big institution, which lots of retail traders do, right? They don't trade themselves. They have people trade for them. And so they say, well, I need to buy 100 shares. I want to buy 100 shares of Palantir. Well, your broker that you send that to, you give him the right to buy when he thinks is the best time to buy. He's not going to buy it immediately. He's going to wait and try and get you a good price. And anything below VWAP, he figures is a good price. So he can call you up and say, hey, I got you a good price on that. I got it below the volume weighted average price for the day. That's anything below VWAP is good price, right? So if it's down here and you buy it, well, they figure that's a good price. That's a good price. You got it at a good price. If you buy it above there, well, you paid a premium for it. You had to pay more for it than getting a good price. So this is a bad price, a good price below VWAP. Well, if you think about that the same way you think about the Fibonacci ruler, all right, we're going to go back to ASTS. So the Fibonacci ruler at this point, anything that you buy below 61.8, that's a good deal. You're getting it for a better price. Anything above 61.8, well, you're paying more for it than you're not getting the best price. Not that you can't buy above, you certainly can. So it's like VWAP, you can buy above if you want to. It's just that this is kind of the drawing line. This is kind of the zero line. Anything below that, you're getting a bargain. Anything above that, you're paying a little bit more than what you want to. But it's just one line, so it's not like, you could really go like this. You could say 50%, 61. You get it down into this region here, well, you're pretty happy, right? Anywhere in that between lower than 50, 61, but 61.8 is the magic number. That's the golden ratio. That's why we use that number. Anything below 61.8, man, you're rocking and rolling. You can buy it down in here. That's a good deal. You get a good price on it. The markets don't come down there all the time and go down. They come down, bounce off that 61.8, and then they turn around and they go back up. That's generally what happens. That's why we come in here and we buy options on, right, when the market's sitting here at 61.8. That's why that little scanner, right? That's why I set it all up with the Fibonacci floor. See this? 78.6, 50%, 61.8, 61.8, 50. These are all sitting right at the Amazon, sitting right at 50%, 78.6, Palantir's at 78.6, Microsoft's at 61.8. So I put that in there so I could tell whether it's above the floor or below the floor, because the 61.8 is the floor. So that's why that's the way that is. So right now, this is a good time to buy ASTS because it's sitting right on the floor. Now, would it be better if it came down below? You get a better price for it, sure. If you want to wait, but it might bounce right there. You never know. Usually bounces off the floor. So let's come in here and we'll buy a call. Well, actually, we don't know if we can buy a call because we have to come and look and see what not real familiar with this stock. Oh, it's got plenty of open. But look at the spread, $65. Oh, that's disappointing. It's 0.3%. It's 61. 0.03% of your $70. I guess considering it's only 0.3, right? $70 for the spread. That's kind of nasty. You're going to want to bid for it. See if you can't get that down to like $35. You go halfway. The spread's $70, so you're going to get it for $35. You're going to get half on the real money. In here, the demo account, we're not, of course. So if we just want to buy, and of course, I don't have ASTS in my little scanner, so it's not telling me if the options are. So we just look right here. Well, the theoretical value is 2,196, and you're paying 2,167. So yeah, it's a bargain. You're getting it for less than what it's worth because it's a down day to day. We could buy the at the money. We could buy a little bit in the money. We could go down here and do, maybe a 78.6. We get a little bit higher delta. We make more money if the market turns and goes up. And then, of course, you have to pay more for it too. The premium is 3,000, is 2,800, 2,600. Buy a premium right at 78.6, just like that. Let's come in here and we'll go market. We'll say, okay, and I've got 100 days on that thing. Did it fill? Did it fill? Did it fill? Come on, fill. Okay, we got it. All right, we're in. Making money. Look, we're down $70. So, because in here we had to pay the whole spread in the demo. You want that to be 35. You want that to be around 50%. You want to bid for it to get half of what the full spread is. And I never do that in here. We did that. We took a lesson and did it the other day where we actually bid for it, right? Where we sit here and play with this little mid number, bid number, ask number, and we run that into the mid time. Demo account, they don't ever let you do it. I think, did we do it with the real money account once just to show you? I think we might have done that. All right, let's go see what else we got out there. Nike. Oh, don't talk to me about Nike. I don't want to do Nike. Why? Because I got Nike and I'm underwater on it. MKE. Let's go see. I haven't looked today. Oh, it's going in my favor. Not feeling bad about Nike. Let me go look real quick. Sorry, go look at my Nike account, my Nike spreadsheet. Oh yeah, I am up today. Is it bringing me out of the hole? No, still in the hole, but at least it's moving in the right direction. Down $169. That's okay. I'm up $55 today. So 40, 50, 60, 70. Oh, I'm up almost $100 today. So that brought me out of the hole from 269 to 169 today. So that's good. I'm glad to see it popping a little bit here. It's popping. Remember, that was a snake. I think that was a snake, wasn't it? Didn't we look at that? Was radar. If I go to the little radar, the sneaky snake. Remember I showed you my sneaky snake pit. I call it the snake pit. I think at one point Nike was in the snake pit, which is what made me. It's there today. Oh, it's a rocket ship. Ooh, that's good. That's good news. The problem is we got earnings coming in 15 days. So it's really active right now. It's a rocket ship. It's not just a snake. It was a snake yesterday. It's a rocket ship today. But I think it's because we got earnings coming up. And I got a live order on there. I need it to rally. I need it to go up. I don't really want to buy any Nike shares. Although I wouldn't feel bad. It's not very much. It's a $44 share stock. It's nothing. It'd be $4 grand. Who cares? All right, let's come in here. But yeah, you want to see the snake pit? I hear you out there. You're like, Lan, show us the snake pit. All right, hold on. Let me show you the snake pit. That's what I got in the snake pit right now. See that? It's titled Snake Pit. So we got Netflix. Netflix is a rocket ship. Now, rocket ship doesn't mean it's going up. Rocket ship just means that it's coiled really tight. It could go down. These are just it's coiled, ready to break out. That's what it's telling us. Now I got like over 100 stocks on this scanner. And these are the only ones that are on the snake spit. So take your little camera right now. That'd be a good one for you to go look at. And put this into your track and trade numbers and go look at these markets. These are coiled. Mara, Bitto, Disney, Coin. These are just coiled. And back is just coiled. But the rocket ships are one level above coiled. All right. MXL, Snap, HIMS, AM, KR, Dow, CR, PayPal. Those are all rocket ships. Netflix and Nike rocket ships. But these have E-cross. E-cross means that earnings cross. That means that before they expire, there's going to be an earnings. So if you go in there and buy an option on there, the recommended option is going to expire after the earnings. So you're going to have an earnings coming up, which is oftentimes why they get coiled up like that. So you got to be careful. You don't want it just because it's coiled or it's a rocket ship doesn't mean you want to buy it or sell it or do whatever with it. You just want to be mindful of the fact that this market is getting all wound up because it's got earnings coming, and that's why it's rocket ship. But these down here, they don't have an earnings, and they're wound up too. That's really good. And the bigger this number is, VRP, the more likely it is to be a good. So MXL is a really good one. Let's go look at that. But it's got no edge. That's the problem. See, no edge. Doesn't mean you can't trade it. It's all wound up, but it means that you can't sell any premium for it. That's what that no edge. That's just for me. Tells me don't go sell options premium because it's scanning. Remember, it's scanning the theoretical value and the premium right here out of track and trade. And so it's scanning these two numbers and it says don't trade it because there's no value. Don't sell put options is all that's telling me. No edge means that the put options for selling cash secured puts are not far enough wide enough gap to give you an edge. That's all it's telling me. But it's in the snake pit. So MXL is in the snake pit. So let's go look at the snake pit, MXL. All right. And hopefully my goal is to put this snake pit thing, hopefully to get that out into, eventually I want to put that out into, oh, look, that's where we had, this thing was wound up like a coiled spring right here. That's why, let's see. That was when and it said long because we were toying with the idea of trying to figure out whether the number gave you long or short, and it was leaning long. And I was like, okay, we're going to put one share in because it leans long. But that was on the very first day we started doing this. We know now that we don't have a good track record for picking direction. All we know is that the market's all wound up like a top and it's getting ready to spin. And it did right there. Look, that was the day we saw the coiled snake. And then bam, rocket ship. So it picked it. It just picked the wrong direction. But we know that we don't know how to pick direction. So we've determined that. Right now, we're not good at direction. We're still working on that. I still got this little thing going here. Those guys, those of you who are here yesterday, you saw me working on this. So this is still running, collecting data in the background. And this is SPY. So we're collecting intraday data on the background. So we're trying to see if we can, stuff I'm doing, just showing you guys what I'm doing. I'm actively doing stuff here for you. And I'm building all this stuff out, and then I put it into the SFO terminal. That's how the terminal gets all this stuff. I got so many things in there. I'm going to have to release the terminal without having all the tools available because they're not all done. But I'm working on it. I promise I'm working on it. All right. So we'll get it to you. SFO terminals. There we go, back here. All right. Yeah, Nike's got earnings coming out. So all right. And that's pretty cool. That was a sneaky snake, and that's why we put that order on there. We just knew it was wound up. We didn't know which direction. And of course, down it went. At least we knew that it was wound up like a top. It came down to 38.2. The floor is 61.8. Anything above that, you're paying a little premium for it. Anything below, you're getting a good deal. So we wait for it to come down to 61.8. Try to get it down in here. All right. Anybody else got one more? We wanted to look at one more off of that list, didn't we? Off the snake pit. Did we look at, that's MXL, that's the snake pit. The other one that was Snap was the other one that was next in line. Let's go look at Snap and then we'll be done for the day. Snap, snap, snap. What do you guys think of Snap? Oh, that's another one. It was wound up like a top. And we took a long position out of that one. We were wrong. And it's flushing down like a toilet. But that was the wind up. It wasn't a rocket ship back then. Back then it was just a snake. So now it's a rocket ship, and that's why it can be in a rocket ship more than one day, and it's probably rocket ship for the last 3 or 4 days. 1, 2, 3, 4. It probably went rocket ship. It was probably snake that day, snake the next day, and then rocket ship these days went into the rocket ship. That's what I would bet. I haven't followed the history on it. I've been thinking of trying to figure out a way that we can have history on it so we can know how long it's been in a rocket ship, how long it was in the snake. Because if we know that, and that's one thing we've been trying to, if it's been like, if it's been a snake for like 3 or 4 days, it's like the first two, our records kind of show us like the first, if it goes snake and then snake, we oftentimes will get a breakout. But if it goes snake for like snake, and then we get 3, 4, 5 days of snake, then it kind of dies down and the market goes sideways. And then if it goes back up and goes back into snake again, and then it goes rocket ship. So usually it goes way up and then it kind of comes down and then way up again. Then we can predict the direction with pretty good accuracy. But if it just goes snake and then rocket ships, we don't know which direction it's going to go. But we got such a small amount of historical data right now. Nothing's really working. All we know is that the market's wound up like a top and it's ready to rip. So you see these narrow sideways channels like that, and then suddenly it rips out of those things. Well, now we can predict that. We got that little snaky predictor that it's going to explode one direction or the other. So we're going to have to still decide which direction we think it's going to go because we don't have a direction on it. We just know it's wound up like a top. But here you go. Came back down. Boom. 50%. It's sitting right at 50. We'd like to see it down at 61 because that's the floor, right? If you buy it right now, you pay a little bit more than what it's worth. So let's see it come down to 61.8, get to there, and then you can buy some Snap. This is your X1SA1. We would have called that a C1, right? Or that actually would have been, a B1 fail. B1 fail. And so because it failed, it's a B1 fail. And because it failed, it turns into an X1SA1. And that's low probability of success. A B1 failure is an X1SA1 failure, right? So this is your entry point to the short side right here. So that'd be your That would be your X. Well, we're just going to call it it would just be a B1S short. Your second down. This would be your first. This would be your X1SA1. So this would just be B1S. It's in the book, how to figure these all out. And it tells you what your probabilities are of the market rising or falling after that. So now we're seeing it come down. It's sitting at 50%. We need it to come to 61 to get the good price. Pay a little bit more, 50 cents more than the dollar, right? $1, you're paying $1.50 for something. It comes down here, you get it for $1. Get it down here, you're paying 78 cents for it. Think of it like that. All right, guys, that's all I got for you today. We could sit here and do this for the next 6 hours, but we've got an hour and a half, and I know one of you are saying, "Come on, man, give it up. We got to go to the bathroom." Oh, we got one where Kurt's asking for hymns. Let's look at hymns before. I hate to cut people off if they ask for something. Hymns. Oof. That's a tough one, Kirk. It's kind of we got the break. So that's our obvious breaks. We got drive 1, counter trend, drive 2, counter trend, drive 3. So I had a full 3 drive pattern coming down off the bottom. But that looks like a full 3 drive pattern up too, and it just didn't materialize very well, did it? So we had drive 1, we got the counter trend. We have drive 2, we got the counter trend. It tried to go with the drive 3 and it failed. So then it came down here and it tried again, and it's trying again right here. I don't know what to think of that one. Where did it come on the retracement? Came back down to 50. It went past 50. It didn't close below 50. We had some spiky dikey doos that went below 50, trying to go down to 61.8, but it didn't ever close below 50. And it's trying to go back up. We could call this A1 here. This is going to be your B1. We could turn on bulls and bears and get a more accurate view. I'm just going off the average true range right now. All right. So this is B1. And I'm going to meld these two together, call that a false breakout. And because it didn't break the high, so it was an internal, let's just call this C1 right here. And if that's the C1, and it's going back up, technically speaking, this thing should come back down here and try this 61.8 again. The only thing that I'm thinking there's a positive growth in this thing is only because we got the little ABC pattern in there. See that little tiny ABC in there? It went green, and then it went 2 bars of red, and then it went green again. First green candle make a new high on a trend is a buy signal. So you got a little buy signal in there. Now it tried to pop a couple of days, and it's kind of fluffing back down today. It's not giving you, I want to see that 3 drive break a new high, and it's not doing it today, which shows weakness. And it's the S&P and everything else is all down, so it's hard for a market to go up when everything else, the general direction of the market is down. Hard to swim upstream, and that's what you're doing when you're swimming against the S&P. We always benchmark everything against the S&P, and so when you got a market that wants to rally like HIMS is doing, it wants to go up. You can tell, but it's swimming upstream. It's having a hard time. It's definitely not an accumulation zone. I mean, it's trying to trade. It's trying to run. It's trying to go. Problem is, look down here. Look at the volume. Volume is just like dead, dead, dead. I don't know. Not seeing anything in there, Kirk, that gets me too excited. It's a wait and see. It's a wait and see. I think I would anticipate a little bit more of a pullback on this one and try and buy it. See if it dips again. And then if it takes off and rips, then you'll be pissed off. The land told me to get out, and that thing just went straight up. So if you want to buy some, let's come down here and go into the 2-minute chart, and let's find a spot on the 2-minute chart and do a little day trading on it. We were going to do this anyway. So let's come and figure this out. So what we do is we come in and we say, well, how much do I want to put into this market? How much do I want to risk? How much am I willing to risk? There's our risk zone right there. Are you willing to risk $134 to put 100 shares in? No, I don't want to risk $134. So we're going to come in here to preferences. We're going to run this down until it tells us how much we're willing to risk. Are you willing to risk $100? Yeah, no, maybe $50. Okay, we'll take it down to $50 then. If we take this down to $50, that's how you're going to figure out how much you're going to put in. Come on, how come that thing moved on me? Okay, so there's $50. All right, so this is the low of the bar right here. This is a good spot to put your stop right there. See that? This is a 2-minute chart. So this is intraday. This is 1 bar back. Now, if you wanted to, you could say, well, I'm not gonna, if it breaks this low, you say, well, if it breaks that low, see right here, kind of set a floor down in here, then that's where I want to get out. But would you let it flow? You only do $50 way down here. So you're going to risk $50 and you put it way down here. But that means you can put in 38 shares. So now you're going to come in here and you're going to go over to the trading tab and you're saying, I'm going to risk $50. So I'm going to go in and I'm going to go in with 38 shares. We'll put in 38 shares. And then we're going to buy that. We'll buy the market with 38 shares. And then we're going to say, I'm going to put my stop for 38 shares right here on the red line. There. Now that's the risk. That's from where you got in to where you'd get out. That's $50. So you're going to risk $50 to see if this market's not going to continue higher. And that's how you do that's how you get into these big long moves that are like, oh, they're going too fast, too far, too fast. How do I do it? You come down here, decide how much you're willing to spend to find out if you're right, that the market's going to continue higher. I'm willing to lose $50 to find out if this market's going to go higher. And if you're like, no, I don't want to do that. Well, you can say, okay, we'll exit chart. So now what you're going to do, you're going to say, well, I want to do it at this line here. I'll risk back to that line. Okay, well, how much are you willing to risk back to that line? The same, $50. Oh, okay. Well, we come back over to our preferences and we're going to run this thing up and have more shares. So now you can go up to a higher number of shares because you're still going to only risk $50, but you're going to risk it back to the low of these 2 points here. So if it breaks below these, generally it's like, well, if it's going to break these, it'll probably go down to this one. But if it doesn't break these, I can have more shares and still risk the same $50, right? So we come in here. How many shares can I have for $50? There's $50 right there. So I can have 85 shares and risk $50. So now I come in here and I go trade and I'm going to buy 85 shares. There's 50. We'll just run that up. Well, I'll type it in. Interest of time will be a typer. Type it in. $85 or 85 shares. That's $2,379. So you're going to be putting $2,379 into the market, but you're only going to risk $50. So you're going to hit buy. And then you can take your stop and drop it right there, just like that. Now you're risking $50 on a market on HIMS. And if it stays above today's price, no harm, no foul. You're making money. And you're making more money, taking same risk, $50, but you're not giving it as much room to wobble. All right. It needs to go. It needs to stay above the VWAP. All right. You can say, well, I'm only going to trade it if it breaks below VWAP, I'm going to get out. Okay, well, do it again. You can put your stop wherever you want in this window, wherever you feel comfortable, and however much you want. The closer you put it at the market, the more you can put in, the more money you can make if it keeps going, but it doesn't give it as much wiggle room. Right. That's how you get into an intraday market. And you can, hold it as long as you want. Hold it forever. And you're only risking $50 to get in. And you got, how many shares did we put in? We put in 85 shares. So we go to our positions and our cost basis was $2,381 and we're only risking $50. All right. That's how you do it. All right, guys, if you have any questions, let me know, and we will catch you Tuesday morning, and we'll do it again. All right, we'll just keep doing it and doing it and doing it until you guys I've dumped my brain into your brain, and you know everything I know. And that's what this is all about. Just trying to pass on some of my experiences with you. I'm not telling you what to do. I'm just telling you what I do, and you guys can learn from me if you want to. All right, guys, we will see you again Tuesday morning, and we got a big special guest coming in. If you liked it, give me the thumbs up. Don't forget to click that little thumbs up. And if you haven't subscribed, do that too. But we got a special guest coming in next Thursday. Prepare for that. Write it on your calendar. Make sure you don't miss next Thursday. Special guest coming in next Thursday. All right. So we will see you then. Hey, look, we're up already.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.